Welcome back to Investing with Confidence. I am your host, Joshua David, talking about the financial markets, but most importantly, how they actually function. And it's based off of supply and demand, which is buyers and sellers entering the market, creating price movements in that particular direction. Also, don't forget to subscribe to the Investing with Confidence podcast, wherever you listen to podcasts, and check out Investing with Confidence on YouTube. So, Al, as we get into this next topic and really continuing this discussion on how the markets function, and you were talking about in the first segment about how so many people are entering into the stock market.
Mm-hmm.
It's the easiest, I guess, entry point for most people because we're conditioned as a person to do that, right? Now, that actually requires the most amount of capital because it doesn't really allow you much leverage.
Right.
So there's a few downfalls with the stock market.
Sure.
And I'm assuming, this is just me guessing, is not many of these new investors are getting into these phenomenal assets like options, like futures,
right,
and like Forex. So let's talk about some of those different assets, why you might want to utilize them based on your time, schedule, and your capital.
Yeah, some of the new participants in the market are using a few or at least one of those leverage assets. But the problem is they have no idea how to use them properly. And that leverage can be a fantastic benefit to you. It's why the pros use it, why the institutions use leveraged assets on a regular basis. But getting into something like that without the proper knowledge and the proper way of managing risk it can be a recipe for, I'm not going to use the word, but a recipe for not good things to happen. And right now we're seeing a lot of volatility in the market. And that has provided some of the big returns that some of these new people have received.
Very fast.
But the volatility can go the other direction.
Yep.
I mean, the market goes up, it goes down. We've seen some of these. I don't know if when you were a little bit younger, if you ever had one of those little rockets that you would set up in your backyard and you'd shoot it off, it would go up like 20 or 30 feet and then come crashing back down. Mm-hmm. That's what a lot of charts look like right now for some of these stocks that these new investors have gotten into.
Another good example is my son has one of those super balls, those bouncy balls.
Right.
And he's bouncing that in the house right now, hitting the floor, hitting the ceiling, coming straight back down so fast. And that's kind of what you're referring to.
Yeah. You'll end up having a bunch of dents in your ceiling that you'll have to repair at some point, and a headache. Yeah, but that's exactly what I'm talking about. And the point is to be able to participate in the markets with a high degree of confidence and be able to participate with something that happens on a reliable basis and a repeatable basis. Some of these things that we've seen that have been like the rocket ships, those may be a one-time kind of a phenomenon. But if you really want to do this with confidence and comfort, be able to do something on a consistent basis, something you can count on. We mentioned timing in that first segment. You said that, that's what we said that's what the pundits tell you can't do. Well, think about it for a minute.
Why do you think they do that?
Well, if you knew how to do that, would you need somebody to help you? Would you need somebody to point out, what you should invest in? No, they don't want you to know that.
Well, they're kind of tricking the public anyway, the way it sounds.
Yeah, and we have been conditioned. They've done a great job of conditioning us to believe that we have to use them. And at one point in time, a number of years ago, you pretty much had to use an advisor or a broker to actually place a trade. That's no longer the situation now. Anybody can enter the market, and you can buy something with just the push of a couple buttons on a computer. You're in or out of a trade.
Yeah, a good example of that is, we've talked to a lot of people and that want to get started trading investing, but also that have, and we hear the same exact terms. Oh, that's scary. That's right. Risky. Mm-hmm. That is this and that, and those same terms are created. I believe they've been created by the institution, so the people say the same thing. So they've been conditioned to think that is actually the truth.
Sure. And again, they've done a great job of conditioning the public to believe that they have to have somebody that is a so-called professional, an advisor or broker, to actually help you to maneuver these markets. Well, that's not the case. And remember that a lot of these people have several hundred clients that they're working with. Could be 200, 300, 400 clients. Well, it's pretty hard to really devote an adequate amount of time to each individual client to do what's in their best interest. In other words, if you have 200 clients, ideally you would have 200 individual portfolios that you would manage. You'd manage the risk part of it. You'd manage the profit part of it.
Two separate plans.
Correct. And with 200 or 300 clients, it's not possible to do that. So it's a lot easier for them to, kind of pass you off to a mutual fund manager or some kind of a preset kind of an investment that maybe thousands of other people are in. Our students come here to the Online Trading Academy because they want to take control of their assets and they want to try to get the greatest benefit out of what the market is providing. Because the bottom line truth for everybody is at some point in time, you will be retired and you will have to rely on something to get you through those retirement years. Right now, you might be accumulating assets. You're kind of in that phase, that income phase. At some point in time, you're going to be in a distribution phase where you'll need something to replace the income from your job. But the volatility right now, that should be looked at more as a friend, as a benefit to take advantage of. For a lot of people without the proper education, it just adds confusion and it's going to reduce their reward to risk ratio. The public just got introduced to shorting and short squeezes.
And that's been happening for years and years and years.
It definitely has. It's something that the pros have used on a regular basis, but there are other things that impact your portfolio too. There's liquidity squeezes, volatility traps, bear traps, bull traps. All these things are things that we teach our students. Anything that could really have an impact on your portfolio, both in a positive and a negative way. You want to learn the negative things because that's what you want to stay away from. But what we're doing really is simplifying things by just doing what the pros are doing. And one of the biggest mistakes that new traders make, and actually, to be honest with you, most of the public make, is that they trade and invest just like the public, just like amateurs. We want you to be trading like the pros. And why would you want to do that? I think everybody listening would agree that the pros out there are doing well on a consistent basis. That's what we want you to do. We want you to start to think, act, and execute like the pros because you can do essentially everything that they're doing.
Yeah, and the first step is really understanding what they are doing. And that's why when you teach these investing classes, a lot of people are introduced to what's really happening behind the scenes. What are some of the opportunities that the public has? I mean, it's the same opportunities that Wall Street has. And we refer to Wall Street, that's the brokers, the advisors, the people that are controlling the majority of the money. So that can be anybody, any of those big money people. We call it the smart money. But I mean, if you feel like you're missing out on something, or you feel like you need more control, it takes a little bit of action to do things maybe a little bit differently. Now, a lot of people are looking to gain more control with their portfolios.
Mm-hmm.
But they don't necessarily. We talk about some of the the fear part of it, right? They say, it's scary. I don't want to use all my money. Well, when you have money with a broker or an advisor, they are most likely investing all of that into the market, which brings you 100% at risk into the market. Using proper leverage, like with the futures and Forex market, allows an investor to utilize smaller amounts of capital because that's what the leverage allows. Explain that futures and Forex market, why they're so great by utilizing that leverage, but also a lot of our listeners probably work during the day. There's different opportunities in the evening to trade and invest.
Yeah. First of all, I think it's important that people understand that there's a difference in the way that you trade for short-term income, short-term cash that you might need on a daily, weekly, or monthly basis, and the long-term wealth buildup, which you're going to count rely on in retirement. And the way that and to really, I think it's really important to realize that before you can actually start to invest for your wealth, for your retirement, you need to know how to trade for income. And you do that with different assets. It's not just putting a stock portfolio or mutual fund portfolio together and then just letting it ride. And don't worry about the drawdowns or the corrections and the crashes. It's using something that can actually start a trade, start an investment, and end an investment. In other words, you get in and you get out in a short period of time. If you need cash on a shorter term basis, you have to use something that is a short-term trading vehicle. The leveraged assets that we're talking about, you mentioned futures, Forex, and options. Those are leveraged assets. The great thing about them, it amplifies the outcomes of your investments. It allows traders to control contracts much more valuable than their initial investment. So a lot of people that think the market has gotten too far away, it's too expensive, I can't participate, using these leveraged assets give you the opportunity to do that. Futures and Forex trade 24 hours a day. So you have many more opportunities not only to make investments, but also to manage your portfolios. Options can be used as an insurance policy. If everybody who owns a home has insurance on that home, at least you should have insurance on that home. If you drive a car, you should have insurance on the car. But not many people have insurance policies on their portfolios. Most people don't know how they can do that. That's one of the things that we talk about in our classes. The risk management, the protection of your capital is the number one thing that you have to think about no matter what you're doing. No matter if you are a short-term trader, a long-term investor, that protection is huge because you work too hard for the money that you have, and you can't let somebody else end up with that money. That should stay with you, not only your initial investment, but any of the profit that you make. And one of the reasons we concentrate so much on price is that the price that you enter into a trade or investment at and get out at, that really identifies the quality of it. It identifies the quality of your protection. It identifies the quality of your profit, the profit potential you have. So that's important. But for most people, it's just getting in the market, just putting money in. And that is not the way to get the greatest benefit out of these markets. So again, it is putting the odds in your favor. It's helping you to have a much better chance of having things go in the direction you want them to go as opposed to the direction you don't want them to go.
Yeah, and speaking of, you talk a lot about price, why that's the most important thing. Most people trade and invest, think about this, every other Friday.
Yeah.
Payday.
Sure.
That's when they put money into the market.
Their retirement accounts.
Yeah, with no regard to price. And just to give some examples on the futures market, you can trade the major stock markets, the NASDAQ, the S&P 500, the Dow Jones. There's oil, the commodities, silver, gold, your wheat,
currencies,
corn, currencies. My favorite, lean hogs. We like that one. But that's the thing is you have these, like, it's almost like tangible assets. I mean, that's what people like to have. They like to trade stock because, I know what a company is. Well, most people know what oil is. Most people know what lean hogs are.
Right.
Most people know the S&P 500. It's the same thing. It's just a different asset.
Sure.
But utilizing that leverage, but also being able to have the opportunity to participate in the morning or in the evening or in the middle of the night. So pretty much anybody can participate with these 24-hour markets. So Al, with these 24-hour markets, they're new to a lot of people. Al, we got our favorite topic coming up. I want to talk about retirement. That's that path. What is the pathway to get there? I want to kind of dissect that a little bit. We'll be right back.